took a little bit of a hit because basically what Trump said, he's going to break their kneecaps if they don't listen to him, which is
Mhm.
actually going to turn out to be a great marketing tool for the BRIC nations.
Hello, everyone. I'm Olivia Voz, your host of Alternative Edge Report. And alternative edges you are probably looking for as equities are selling off. So I brought on a special guest today, Peter Grandich, who has been a Wall Street veteran for over 40 years. So he is right next to the trenches with us to see what we need to look out for. Peter, welcome.
Thank you for having me.
Well, thank you for coming on today, especially as markets, as they say, are in turmoil. We are seeing equities seeing a lot of pressure. We're testing levels that we haven't seen since September. Peter, did you see this coming?
Well, I began the year with we have a financial planning group, and I said that you have two choices: be completely out of the stock market at the beginning of the year and have alternatives overseas, mostly in Asia. Or if you want to ride the stock market, it may last a few weeks after the inauguration coronation, as I called it. But by then, you'd also want to be out of the stock market, in my view. Uh, Extremely overvalued relative to areas elsewhere in the world, extremely overvalued. And so it doesn't come as a surprise. I do think that the volatility is a signal of a ending of a move that's gone on for quite some time. And what happens after a long move one way or another, there's a big switch between the longs and the bears and the bulls. And the last of the bulls still try to milk it while the early bears try to take advantage of it. And that's what's behind this volatility. And I believe it's a signal of a major uptrend coming to an end. Whether or not there's a reversal and down a lot, we won't know for several weeks. But I do think much of whatever would have been gained in this year has already been achieved.
Well, you mentioned that tug of war between the Bulls and the Bears, and it seems like the Bears are winning right now while the Bulls are sliding across the mud over here. But you mentioned other factors like the inauguration. What's the backstory with the sell-off?
Well, first of all, the changes in 40 years is dramatic. And if you weren't around, the dinosaur age was when I was. Now, when you see the filming from these networks of the New York Stock Exchange, it might as well be a museum because so little trading takes place there. But back in 1984, when I entered, almost 90% of the daily trading was individual investors. Institutions were small and there was no computer trading. Now, over half of the money that's in the stock market's in passive funds. That's a uniqueness that can be explained further to why we've seen what we've seen. And of the remaining half, almost two-thirds is computer driven in some form. Very little individual investing and trading compared to what it was 40 years ago. So, first things I say to the people like myself who have gray hair or no hair, the market that you were used to 30, 40 years ago doesn't exist anymore. And you have to get used to the new board game that exists. And part of the things that really drove the market up is now what's starting to drive it back down. And that was the narrowness among a handful of stocks. And part of that reason is because so much money is in index funds now, where a narrow band of stocks are used within those index funds. So as long as the market was going up, it was a self-fulfilling prophecy going up. But now you can see that on the downside as well. So I think that's the main reason. Then there's a whole bunch of other things from tariffs to interest rates and all that, but it really is a completely different, certainly for trading purposes, than it was 30 or 40 years ago.
And Peter, you make a good point. We did have a narrow group of stocks that were pushing this market up, and as long as they were doing well, everyone kind of followed. But Peter, everyone's looking for the next leader. Is gold the choice now?
Well, it's still treated by kryptonite by mainstream Wall Street. It's an amazing phenomena that since the new millennium began, gold has outperformed both stocks and bonds, but it has such little ownership within the investment community, at least in the United States. Where I think it's going to come attention to as the generalists see that it's going to be very tough for sectors in the United States to see earnings growth for the foreseeable future. But one sector that's knocking it out of the park right now is the gold market. In fact, they're
Mhm.
setting record free cash flow numbers. And I think as that happens over the next few quarters, regular money managers are going to see how well that industry is doing compared to others, and they'll come in and play it. But Wall Street will never, ever fall in love with gold, but to fall in love with gold means you have to fall out of love with stocks and bonds, and that's too important and too much of their makeup to do so. But I do think gold will have an interest to the general Wall Street market. We're already seeing it now in some of the biggest names among the gold producers.
Okay, so if you can't quite get away from loving equities, I mean, you can trade gold as an equity, right? You can look at companies like NEM. Are there any stocks that maybe could be a alternative for those who maybe might not step away from things like Nvidia or Microsoft, but maybe start to incorporate in their portfolios?
Well, right now, the top North American gold producer that's making money is literally printing it, doing so well in free cash flow, is Agnico Eagle. Newmont and the Barracks, which are older names that some of us old guys, whether we were active in this market or not, remember, they're just turning themselves around to get in a better position. What I do think what will transpire here and what will really have an impact on this gold is what was the reason for all these gold transfers in recent weeks, especially out of London into the US? And why did the president just suddenly start talking about gold in Fort Knox and questioning whether or not it's there? This is all intriguing. It's also made those of us that live and breathe it for these last few decades quite interesting because there's always been a very small group of us that have felt that gold has been lent out more than multiple times through bullion banks, something like the old movie produces. So it's quite interesting now. And we might not even have seen yet the real volatility in the gold market if it turns out that there is some concern that the conspiracy people had some of it right, that there's been too much leverage in gold and too many people are shorted. So interesting time, certainly for the next several weeks for the gold market.
Well, what would that look like? And hey, shout out to the conspiracy theorists. You know, sometimes it takes a while for it to all come into fruition. But what would that look like? Like a tremendous gold squeeze?
Yeah, well, first of all, called the tinfoil hat guy 20 years ago because I used to speak about how the trading was manipulated. And finally, the arrests were made and people were convicted, and the tinfoil hat was put to rest. What I think it would play into is we know that central banks in the world in the last few years, outside of North America, have been extremely aggressive purchasers of gold. At the same time, 34 countries have repatriated their gold from London and New York back to their
Hmm.
own central banks. If we now hear that the biggest supposedly holder in the world of gold doesn't have all its gold or doesn't have the right to all of its gold, I, I would start to say that some of the crazies that have been in this gold market that talked about 5,000, 10,000, which I always said, hey, if it occurs, I don't want to be in the world how it would be existing. Those numbers come into play if there's such a thing like that. Right now, it's all conjecture, but it is kind of strange for the president and some others to bring
Hmm.
that out into the open because, he even joked in a couple interviews how he's going to go there and open up and see. Can you imagine the president of the United States going there and finding not all the gold not there? I can't imagine what the markets would be like that day if that was actually true.
They would be so right that they wouldn't even be trolling on Twitter saying, I told you so. Those gold bugs are going to collect their money and walk away and name an island after them after something like that. So obviously, people are, there are traders that are kind of predicting this. Or do you see any more? Well, let's say that didn't happen. Do you see any other catalyst that can bring gold higher in in the future in this year?
Yeah, Olivia, I'm a big believer in the BRICS nations. Now,
Hmm.
in recent weeks, it took a little bit of a hit because basically what Trump said, he's going to break their kneecaps if they don't listen to him, which is
Hmm.
actually going to turn out to be a great marketing tool for the BRIC nations. But it's the main reason why 3 years ago I moved out of equities and into gold itself for capital gains, because I believe more and more nations are going to look to trade away from the United States, or at least more with themselves than the United States, especially using the US dollar as its trade weight. The first thing that they were concerned about is obviously the freezing of the Russian assets and then taking the interest and giving it to its enemies. And now they basically see now that this president, acting on behalf of the United States, is willing to create all these tariffs and all and impact trading just gives them more cause to think about. Maybe it's time we start trading more with ourselves and using our own measure of some type to pay back and forth with each other than having to be involved with the United States. And I think that's going to be a big thing that's going to come back to bite Trump. I think the BRICS will get bigger now than they might have even would have thought so a year or so ago.
Do you have a specific level you're looking at in gold, or you just know it's going higher?
Well, we're up in it. We're up in the magic land. We've never been here before. People like round numbers, 3,000. Some people say to me, how could it possibly go to 4 or 5,000? Well, I can remember years ago when I started a business, a young man came out of Gainesville, Georgia that no one knew named Robert Prechter Jr. The Dow had traded between 700 and 1,000 for 27 years. And he was predicting 3,600. He said, Dow can't go to 3,600. I remember experts at the time explaining there's just no way it ever could be. And then, of course, it went much to 36,000 and beyond, not just
Hmm.
3,600. So numbers are numbers. I can tell you this. United States is extremely underowned in gold. I would say if we went into the typical portfolio in any hedge fund or any managed group or even individual accounts and brokerage firms, not half of 1% is devoted to gold. So even if they went to 1 or 2%, it would be a tremendous move for the gold market, a lot higher than where it is now.
All right, don't be like the US. Make sure you stock up on that gold. As Peter Grandich, thank you so much for your insight today, letting us know that gold is going to have a solid 2025. Whatever you believe in, the conspiracy theorists, there's lots of different factors that are playing into the moves. Peter, it was great to have you on. Thank you so much.
Thank you for having me. God bless you.
Thank you. You as well. All right, guys. Again, I'm Olivia Voz. Thank you for watching Alternative Edge Report. Make sure to like and subscribe so you don't miss future Peters to tell us how to trade the future in gold.